Hey guys, Dave with Moniology on Markets. This is the Precious Metals Review for March 3rd, 2019. Friday was nasty. This week was pretty bad. And a lot of folks are jumping off the bandwagon here. And perhaps for good reason. Let's find out what's taking place in the precious metals space. So starting with gold here, these charts are all from a weekly perspective. Gold closed the week at about $12.99. If you look at the futures, really it was $12.94. But bottom line is we broke down below this wedge here, this bearish wedge pattern that I pointed out over the last couple of weeks. Now, a lot of folks will say, well, when you break down from such a trend, it's inevitable that this uptrend is over. And they may or may not be right. I have no way of knowing the future, nor do they. So don't make any assumptions based on these prognostications, whether we're breaking out or breaking down. Let's take a look at what's actually taking place without the emotion. That's the point of charts. So a couple things. One is this particular move was led by momentum. That's much different than moves in the past where perhaps momentum here was not as high as momentum here. In 2016. Momentum here was higher than in previous times, and that's a very positive development. It's not to say that something goes straight up and eventually breaks out on its first attempt. It makes a rally, it breaks down, it consolidates, finds support, regains its strength, and then moves higher, potentially. What we need to see here is we need to see the support of gold above this 50 and the 200-week moving average consolidate around above that 1270 area and eventually move back higher to retest this 1380 zone and ultimately break higher if it does so. Unlike previous breakdowns here, this is the first of its kind that it's led by momentum and that we have support behind it with a 50 and the 200-week moving average underneath it. And at the same time, we see here, because notice this move here, right? Take a look. So we had the 50 above the 200, right? But there are a couple of different factors here. First is when we crossed here, we were already in the decline. All right, the MACDs were already weakening. When we double topped here, we had negative divergence. We don't see any of that here. And so, in my opinion, this is just the start of the move, and it just needs to consolidate and remove its overbought condition here. But if it cannot hold this area, then this is your area to kind of dump this position, unless you're a long-term bag holder. But if you're in it for this upward move, I think this is the area to watch very, very closely. You got Palladium here. Palladium is just in a complete bull market. This is beautiful textbook cup and handle. Once we broke out of this handle here, this was your trigger to go long. You had the 50-week moving average beneath it as support, and it just rallies. And notice what happens when a bearish wedge breaks higher. It actually turns into a very bullish development. That's what we see here. Can we pull back to 1400? Absolutely. It would probably be healthy, but ultimately, I don't know how long this goes, but it's very, very fun to watch, and this is actually something that's going to be very, very bullish for platinum. Why? Because palladium is used in catalytic converters, and it's expensive. If it's platinum's a better metal to use for catalytic converters than palladium. Well, platinum used to be more expensive, now palladium is. So what are car manufacturers going to do? They're going to use platinum, and that's going to increase the demand for platinum, and this is what you see here. You want to see this breakout above 900, and I think it will in the coming weeks and months. We might consolidate here, but there are platinum companies right now, the few that I've been watching, are starting to really, really outperform any other miners, and that's why one of the arguments behind this breakout eventuality happening very soon. Momentum is leading. That's very positive. You got positive divergence, and sure, you're going to pull back when you're at the top of the Bollinger Band. That's okay. But if momentum is leading, that's the sign that you need. Now, silver has been acting weak here. Silver has had this negative downtrend here, coincided with this bearish wedge pattern, and we couldn't break out above that 61 level of RSI resistance, and we broke down. Fair enough. Now what happens here? You've got this Bollinger Band moving upward. You have Yes, we broke below the 50-week moving average, which is not a positive sign, but keep an eye on silver between 1500 and the 1550 area. Let's see it consolidate here, and I think ultimately it does break up to the upside, and it's going to be beautiful when it does. On the other hand, if it goes lower here, then it goes lower. It's just that simple. US dollar, it's consolidating here above its 50-week moving average, but momentum is not strong. I think eventually this moves lower, but until it breaks the 50 and until it breaks the 200-week moving averages, you have to be cautious if you're a precious metal bull. But at the same time, you look at this, and this looks to me like a massive head and shoulders. And you saw Donald Trump this weekend. I don't know if you guys are going to delete my videos. I said that name. But nonetheless, Donald Trump said that he wants the dollar lower to make us more competitive. What does that mean for the dollar? Stay tuned. Gold miners, as represented by the GDM index. So look at this. We broke out from this particular downtrend rather. We've got the 50-week moving average beneath us as support, and now we had this shooting star right here. We couldn't quite maintain the 200-week moving average, and so now we're going to probably consolidate and head towards that 580 area for a little while, and then let's see what happens. I think this ultimately holds, and I think we move higher. And because, why do I say that? It's because we had the momentum divergence. Price was following momentum and not the other way around, and that's what you see in uptrends, not in downtrends. This is another view of the same index. It looks like. Well, actually, this is the monthly, and so from a monthly standpoint, it looks like an inverse head and shoulders consolidating below the 50 month moving average around that 642 level. We couldn't quite break above it this time around, but that doesn't mean we're not going to break it eventually. Notice we're doing this consolidation right above this breakout from basically 2016. So it could be frustrating, but keep the big picture in mind and look at the PPO here. That's something that's very, very important to consider. In the GDX here, again, we had a nasty pullback. A lot of these folks that bought right here are selling off right here, and it makes sense that they're doing so. That doesn't mean it's going lower, as some individuals say. In fact, I'm going to draw this here live in the video, so I apologize for the inefficiencies, but I think it's important to see. We're still in an uptrend, if you will, here. I mean, it's not clean, but that, and we did close at the lows of the week, but there's still some area for this uptrend to be considered very much intact, and even if this trend line breaks, okay, so it breaks and we head lower to the 30 area for a little bit to consolidate further, there's a lot of support beneath here, so there's no reason to to really lose your minds. But again, it's important to be cautious and understand what's taking place. Here's another view, the gold box index HUI. It's still in an uptrend. There's still above the 50-week moving average, and still above the 50 RSI level with positive divergence. So I'm not generally concerned, but we'll see. Here we couldn't hold this area. That means a pullback is in the cards. Consolidation is in the cards. But that does not necessarily mean that we are breaking down and heading to new lows, as some folks are suggesting. Here are the silvers. Do the silver miners look like the silver's breaking down? I mean, silver was weak, but we're still above the 50-week 50 level in RSI. We're still above this downtrend breakout. And I mean, silver miners are the strongest in the space. You see the junior silver miners are outperforming the metal. Here it's broken out, and yes, we had a shooting star candle, but momentum is above this downtrend, and that's important to consider. We might consolidate here, but it's above the downtrend. Here's just platinum, another view of platinum breaking out of RSI. Here are a couple of ratio charts. Gold to silver. You want to see silver outperform gold, and it hasn't. It hasn't done so, but this is also like a shooting star, if you will, in the gold to silver ratio. Maybe this is a sign that silver's gonna start to start overtaking gold again. And if you draw just a line like that, that's basically maybe the end of the gold performance versus silver, and we start heading lower. Let's see what happens. Gold miners versus gold. This is an area that's important to watch right around here, but we are still above the 50 RSI level. I keep preaching it. If we're above that level, we're in an uptrend. Here's gold in the US dollar. Closed at 49.71. I want to see that recovered very soon because that's very important. But here you saw this was negative divergence. You saw higher highs in the ratio, but you saw higher lows in momentum, and that's why you're seeing this pullback here. How long for remains to be seen. Here's juniors against the metal, pulling back, but still firmly above the 50 RSI. Juniors against the majors. That's an area that I want to see juniors break out above, and we haven't been able to do that yet. So not positive there. You've got the junior silver miners against the majors. We did break out above the 50 RSI, but closed right below it. So still a lot of battles yet to be fought. And here's platinum against gold. Still in this downtrend, but definitely something very, very close. PPO breaking above zero, very, very close to breakout. A couple more charts here. Silver versus gold, just the ETFs. Still acting weak. Every time we hit this 50 RSI level, we turn lower, but I think we're close. This level has served as support before, and let's see if it happens again. And finally, the Australian dollar. That's a currency that tends to do well in commodity bull markets. It's consolidating here, but it's consolidating below the 50. I don't like when that happens, and you see a lot of like downward movements. So it could break down, and that won't be positive. But it still broke above this downtrend since 2018. It's consolidating here. Let's see what happens in the Aussie dollar. Bottom line is, guys, it's a mixed bag. I think consolidation is very much needed here, but I think that the doomsday scenario of this bull market is over for 2019 that I've read is hogwash, frankly. I'm not saying it's not, or it is. I don't know, but what we saw this week certainly is not a indication of risk off. Anyway, guys, best of luck with the PM space and the markets in general. If you like my work here, shoot us a note at dave@moniology.com and save yourself a spot on the premium subscription service that we're launching around the July time. So I would love to have you part of our community. Take care, guys.